Hello, what up, guys? How you guys doing? Hope everyone's good. Uh, I come today with another market update for you guys, and I'm gonna teach you guys how to spot chart patterns when trading. You understand? So please stay tuned to the end. Don't forget to like, subscribe, and leave a comment at the comment section below because it really does support the creation of more videos. So let's get straight to what we have today. So remember earlier I told you guys that I'll be showing you guys how to analyze using your chart patterns, you understand? So in today's video we'll be talking about volatility 51 index, and we will be breaking it down to see and to know which direction we could expect the market to move, although trading is reactive and not predictive. So we'll be analyzing from our higher time frame, starting from our monthly down to the weekly and then to the daily time frame. So let's get straight to the chart right now. Starting from the monthly time frame, what do we see? As you can see clearly now, this is the volatility 51 index on the monthly time frame. As you can see, on the place I located, you can see an inverted head and shoulders chart pattern. You understand? An inverted head and shoulders chart pattern, which made the market move up. You understand? So at this point, what could we be expecting? Yes, as you can see, the market now is on a level of resistance. And as you can see very well, it's on a level of resistance. Although this market will still continue to be bullish, you understand, but we have to see a short-term bearish action on the market price on the monthly time frame. We have to see a short-term bearish market price on the monthly time frame. So as you can see, the monthly time frame is going to be a bit bearish. So before continuing the move to the upside, so let's drop down to the weekly time frame to see what we have on the chart. Dropping down to the weekly time frame, as you can see, guys, we're also on the level of resistance on the weekly chart time frame. As you can see on the weekly chart, we're also on the level of resistance, and I use my arrow to indicate that we are going to be expecting a bearish move to the downside. As you can see, we'll be expecting a bearish move to the downside, and as you can also see that this market created an impulse. Understand? Create an impulse with the green candles, with the three green candles. As you can see, green long candles. Market created an impulse, and after impulse, an impulse must be followed by a correction or a retest. Understand? So measuring the retest, we use our Fibonacci from the high to the low to test from the high to the low to test to know the next potential retest that this market is going to make, to know the place where this market is going to touch while retesting. And as you can see, the market is going to touch the 61.8 or the 50 level of the Fibonacci, which is lining up with the previous supports. As you can see, which is lining up with the previous supports in the chart. So as you can see, the weekly time frame is also bearish. It's going to drop down to the 61.8 level of the Fibonacci before it can now provide a move again to the upside. So dropping down to the daily time frame, as you can see on the daily time frame, you can see an M chart pattern which is formed. Understand? An M chart pattern which is formed. So what we could be expecting in this market from the daily time frame, we could be expecting a break of that neckline, because I indicated it with a rectangle. We will be expecting a break of the neckline, and after the break, a retest. And after the retest, we'll be looking for a strategy on the intraday time frame or lower. Understand? We'll be looking for a strategy on the intraday time frame with my students, and then we'll be engaging in the market. Understand? So always note that after the formation of an M chart pattern and the market has broken the neckline, the market must always go to retest that neckline. So that's why I indicated it with an arrow. After the break, you can see with the arrow downwards indicated the break, that the break is that the market is going to be providing. And after the break, we want to expect a retest on that same neckline. Understand? I use an arrow to indicate it also before we could engage on this market for a sell. So the daily time frame also seems quite bearish. Understand? So how to approach this particular pair? As I said earlier, with my student, we wait for a good retest on the supply and resistance zone, and if our strategic conditions are met on the intraday time frame, we will engage in the market with a good risk to reward. So I hope this video helped you guys. Don't forget to like, subscribe, and leave a comment on the comment section below, because it really does support the creation of more videos. I hope you guys enjoyed the video. More updates on the markets coming soon. Thank you guys.